K. Ramanathan from ING Investment Management as well joins us on the show. Ram, hi, afternoon. Does it seem like 6,700 could sail through till 13, till the opinion polls start trickling in, or do you think there is correction in store for the market?
No, clearly the short-term direction of the market will be driven by the election results. Any seat number about 250 for the NDA will result in a rally. Any seat number which is below 220 surely will result in a significant sell-off. In between 220 and 250, clearly one needs to watch the coalition politics, how many parties, support from outside, support from inside, how they bargain with the BJP, how the policies will be affected. So all these will come into the picture and the market could be a little bit choppy.
It's a toss-of coin what will happen on 16th of May. But everyone will have to position themselves. For those who are feeling confident about the election outcome, maybe they are buying beta and banks. For those who are feeling nervous and are slightly tentative, are buying into defensives, they are sitting on cash. What is your portfolio strategy?
Our positioning is towards the positive side. We are overweight on financials to the extent of 4 to 5%. We are neutral to marginally overweight industrials. So clearly these are the beta sectors which will swing either ways depending on the election outcome. So we are more tilted towards a stable government formation in our portfolios. From a fundamental perspective, although we are not negative on IT, our positioning is neutral more because of the relative positioning of other sectors in the portfolio. We are underweight FMCG, we are neutral oil and gas, and we are underweight telecom.
How does one figure out what kind of NDA victory is in the price? I mean, now we are not debating whether NDA will be there or not. Now the debate is number of seats. How does one know whether 250 seats is in the price or 230 seats is in the price?
See, clearly there is no mathematical formula. It's an individual call and possibly to some extent gut feeling also. But I would guess that the current rally in the market discounts say 230 to 240 seat kind of win for the NDA. And that's what, based on our discussion with a lot of brokers, the market also expects. So clearly if, as I said before, there is a number which is more than the range of 230 to 240, which is say 250 and above, the probability of a more stable government which can push through policies comes into the picture, market could get re-rated a little bit more. But clearly if the number of seats is less than 230, say 220 or below, the comfort of the market or the market has already discounted that, and surely that's not expected in terms of the outcome. So there could be a sell-off in the market.
So Ram, sectorally, what is it that you're advising to your clients right now, and what's your market approach?
Yeah, as I mentioned earlier, we are overweight financials. We have a good sprucing of PSU banks in the portfolio. The latest results indicate that things are not as bad. Some of the managements in the call have said that things have bottomed out, though recovery will take some time. Valuations are very comfortable, so we have built some positions in PSU banks. In terms of industrials, we were slightly early to get in. I would say on an average, the industrials valuation already discount recovery, already discount FY16 earnings, and possibly while there might be a knee-jerk upward movement if the election outcome is positive, I feel valuations have already reached a fair level. So we would look to sell those stocks on every rise. So currently our positioning is marginally overweight, but clearly the intention is to reduce overweight on industrials.
There are bargains in this market.
In terms of the beta of the portfolio, currently we are running somewhere about 1.1.
There are bargains in this market because the mean reversion has already happened in beaten down names. On an average, cyclical stocks are up 40 to 50%. The small cap index is up more than 50% from the recent low. Do you think low hanging fruits have been plucked, or still there is a lot of money to be made from current levels?
No, you're right. Given the fact that you already have a 30 to 50% kind of movement in several stocks, it's not going to be very easy to make money from current levels. the outcome clearly is quite important, and things have to be positive for a more upward movement. Having said that, if things dramatically change post the election outcome, there is still a leg up for some of these stocks, say for example the PSU banking space. Even if you adjust for the restructured assets and the NPAs, some of them are trading at 0.6, 0.7 times price to book, the large cap names I'm talking about. So possibly there is scope for them to get re-rated to 0.9 or 1 at max. So that would be a 30-35% kind of upward movement. But clearly all this hinges on the election outcome.
So assuming that we get a stable government, what will change? Because the problems for Indian economy are so deep-rooted, they are so chronic in nature, that irrespective of who the next Prime Minister would be, things will not move or things will not turn in 2 or 3 quarters. So what is the excitement all about? And for those who are buying into stocks, are they really buying a lot of hope?
Surely expectations and hope are built in today, because clearly we need to see the formation of the government, the ministry allocations, the new budget which will be revealed post the formation of the government. But based on the analysis of the mandate of parties and obviously the fact that we have bottomed out in terms of growth. Clearly, the less than 5% growth hopefully is behind us. We are already seeing recovery. We need a government which will address speedy recovery. We have the capacity to go back to 6 to 8% kind of growth. Economists do expect a 5.5 to 5.75% kind of growth going forward. So clearly, if the budget indicates as well as the policy measures indicate that more projects could come in, you will have loan growth, you will have a good amount of order book position growth for the industrial space. So all this will fall in place. As of now, clearly it is an expectation, but surely if expectation turns into reality, the stocks would react positively.